It is a big week in the markets as we close out the first month of 2024. We're going to be discussing all the economic data, the earnings reports, what's going on in China, and much more today on Money Never Sleeps. Welcome back, everybody. Hope you had a great weekend. Before we get going today, do us a favor, hit that like button, subscribe to our channel. Nothing that Kevin or I say is financial advice, so please do your own research before making any buys or sells. I don't know what I just said right there. Like I just had a little mini stroke. Kevin, there is a lot going on this week. We're seeing the markets have a kind of tentative start to Monday, if you will. We're mostly green across the board, but it's just these like little itty bitty movements because everyone is waiting for the economic data this week, for the Fed meeting, for the earnings calls. How are you feeling as we kick off the final week of January?
I feel pretty good. I think that's something I don't say often, right? I usually am like, it's not good, guys, but I feel really good about this week. I'm not expecting any type of negative price action, more or less until after we get those Thursday earnings. Those Thursday earnings are really key. And again, if there's any type of move in the market, they're probably going to want to do it right before the close on Friday. I don't necessarily see anything happening till then. I think the data is going to be really interesting to see because we do have some important data coming out this week. We also have, the FOMC is this week too, if I'm not mistaken, correct?
On Wednesday, yeah. So let me
Yeah.
run through the quick schedule for the week as far as data goes. Tomorrow we get the JOLTS report, so job openings, as well as some consumer confidence numbers. On Wednesday, we get the ADP job report, so it's private sector employment. And that's also the same day that the Fed meeting begins tomorrow, concludes on Wednesday with their rate decision, expecting to be another skip. And we'll hear from Jerome Powell for the first time this year. There's no Fed meeting. There's no Fed decision in February, so we'll have a little bit of time in between these two rate decisions. I believe March 1st is the next one, so about 4 weeks. Then on Thursday, we get the initial jobless claims as well as some manufacturing data. And on Friday, we get the big jobs report with non-farm payrolls added, unemployment rate, as well as hourly wages for December. So a lot going on when it comes to economic data. Do you want me to hit the earnings that we're expecting? Do you want to touch on economic reports that we're watching first?
No, let's go into the earnings. I'm going to pull up the earnings calendar so everyone can see that as well. So we can jump into that right now.
While you're doing that, I will say these job numbers, I mean, they're important, but they're going to get revised because every single jobs report has been revised for the last, I don't even know how long, in a big way, normally down. So I guess we'll take each one of those reports with a grain of salt. But yes, the earnings are the ones that are really, really interesting. We see SoFi reported this morning. Tomorrow, we have a bunch as well. Some of the bigger names, Microsoft, Alphabet, AMD. We got Starbucks in there. GM reports before earnings, before the market opens tomorrow, as does Pfizer. On Wednesday, we get Boeing, MasterCard. I believe Samsung is in there as well. Qualcomm. Oh, yeah. Thursday is a huge one for tech with Apple, Amazon, and Meta all reporting on the same day. So a ton of tech earnings this week. It's going to be really, really exciting to see how it all plays out, what their results were for Q4, as well as what's their future guidance in the months ahead, and throughout the rest of 2024. Are these companies expecting economic slowdowns? If they are they going to say anything about it? What is the consumer looking like these days? With something like MasterCard, are credit card delinquencies on the way up? There's so much going on underneath the surface, while the rest of the market looks bullish for the most part. I mean, let's touch on crypto for a second. Bitcoin back up over 43K today. It lost a lot of momentum from the ETF decision. Well, it's on its way back up right now. We see some of the altcoins running as well, with Solana back over 100. Let's get into TradFi for a second. We see my beloved NVIDIA up almost 2% on the day. Tesla is rebounding from its lows. Netflix continues its momentum on the way up. Meta is seeing a run back above 400 a share. Coinbase recovering into the 130s. So we have a lot of things that are pointing in the direction of continued bullishness. At some point, it's either going to, is it going to break higher? Are we going to see a pull back? Like, it's a really, really, it continues to be a tough time to be a bear, Kevin, not going to lie.
Oh yeah, 100%. But it's also pretty foolish to capitulate at all-time highs too, right? I think the conditions matter more than the actual price of where we are in the equity market. And again, we know that majority of the equity market is comprised of heavily weighted tech stocks that are holding up, right? Apple, Nvidia, Meta, Google, Microsoft, all these companies are doing extremely well, holding up all-time highs at this point against the rest of the market, right? We look at the Russell against the other major indexes. Those stocks are not in the Russell. Therefore, the Russell has not seen all-time highs like, the Dow, the S&P, and the NASDAQ have. So I want to go back to the earnings because I do want to show some other things in here. It's really interesting when I look at this chart because I just see a lot of losers. I'm sorry. I see companies that I know aren't going to have good earnings. However, the expectations for a lot of these companies outside of tech are extremely low. So if they do beat, it's like there's an earnings beat, you know what I mean? And I think that's going to cause sentiment to continue to push up. Like I'm looking at this right here, Peloton on Thursday before market open. I don't know how many people are buying those fucking bikes still. I don't buy the fact that people are buying those. UPS is going to be really interesting moving forward because we know how FedEx earnings went a few weeks back. So I'm going to be interested in seeing how, UPS, how they're doing. They might have had a good Q4 given, the Christmas season. However, moving forward, they might not have as much of a hope pushing into the second half of this year, right? And I guess the next big event for UPS in terms of what's going to push, a lot of traction is like Memorial Day into like July 4th when you get a lot of patio furniture. Sounds stupid, but that's actually one of the busiest seasons outside of the holiday season for UPS. If you look at this here, other ones, oil is going to be important. So I'm looking at Marathon, Chevron, ExxonMobil. Going to be really interested to see some of those energy companies, how they produce. Um, JetBlue, obviously, with all the Spirit Airline stuff. So there's a lot of smaller ones in here that I think are either going to barely beat or they're not going to beat at all. And it's going to be kind of a big letdown. The question is, are we putting our expectations too high on the tech stocks? I think so. I think that there's going to be a lot of hope that these things beat, some of their expectations. Also think of who's kind of setting these expectations too, right? Um, I think with how much everyone is so bullish on these, they're hoping that everything works out well. Amazon might be the only one I think that does kind of well because Amazon seems like they're going to do well regardless. They're almost like the internet version of Walmart. People are going to continue to use Amazon, Amazon Prime. The ones that kind of worry me more so in that would be Meta and probably Apple. Microsoft, they're saying they expect 15% growth this year in terms of their revenue. I don't know if that's going to happen. But I think the ones to watch out of those big tech ones are definitely going to be Meta and Apple. Amazon, I think, might squeak by and be fine. But it's a big week ahead. There's a lot of things that are going to keep in mind. We're not going to see the markets move until that comes out. Been a lot of news over the past 24 hours, even the past week, over the weekend, that could definitely impact markets. But we're not going to see that until they get those earnings, right? And I think they're going to pump this market a little bit until we get there. But that's what I'm seeing for this week in the earnings.
Yeah, continued tensions that are being heightened in the Middle East, for one thing, will definitely impact markets. The price of oil is going to be impacted by what's going on over in Russia and Ukraine. And then we had Evergrande, if you want to get into that now, Kev, and maybe give us, so you've been talking about it for a while. I know that you've been, not quite boots on the ground over in Asia, but damn near close to it, staying up with the Asian markets at night. That's dedication right there, buddy. If you can kind of give us the rundown on Evergrande, the latest there, and maybe like a 30 to 60 second, very like base level understanding of why that is going to impact the US markets and why we should care about that over here.
Absolutely. So we know that China in the past few days has been doing some extreme moves to keep the market up, right? They banned the purchasing of US ETFs, they've banned short selling, and they're trying to gain offshore money to come back onshore in order to prop up their market. They've been injecting tons of liquidity. However, how they're doing that, they're selling US treasuries to pretty much trade in for yuan, in which they pump into the markets, right? So that means US treasuries are being impacted in the United States. They also have been injecting an extreme amount recently. So that tells me that the yuan is going to continue to grow. Continue to lose strength against the dollar, right? And now we're seeing that we're going to get a liquidation out of Evergrande. And we know that there's a lot of exposure to Evergrande from the banks. Just say two banks that I know are very exposed to Evergrande. We got UBS, and we also got HSBC. Those both have American exposure as well. So we're seeing US debt being sold off. We're seeing the yuan being pushed down against the dollar, which causes the US dollar to push up higher, which is going to impact the US equity market because now you need more dollars to purchase stocks too. And then if we do see any type of volatility, that could cause the equities to come down, dollar skyrockets, and that just absolutely is like a spiral to the point where it's just going to keep bringing the price of these equities down in the United States. The big thing is offshore money is not going back onshore to China, and that's going to impact the US, especially with how big the Chinese economy is. It is the second largest in the world, and there is no chance that people are going to put their money in somewhere where debts are being paid pennies on the dollar.
Oof, okay. I think that is very, very well said. So appreciate that. Now, what else do you want to get into surrounding Evergrande and the decision that they have to liquidate there?
Absolutely. Let's pull up this chart. Actually, this article from Reuters. China. It's obviously what we just talked about. Evergrande was ordered to liquidate. The judge over in China said, enough's enough. At some point, we just kind of have to get this process going, which is pretty ballsy if you ask me, because for some reason, after 8 delays, they are finally liquidating this behemoth of the Chinese property sector. And the important thing with this being liquidated is that the price of these assets the liquidators aren't going to keep losing with each time they push it back, right? We've seen what happened in the Hang Seng and also the SSE composite, and we know that the prices of a lot of these assets in China are dropping significantly. We know that there's numbers coming out. I'm not going to say if they're true or false at this point, but they're not good, right? I think it's probably, if anything, maybe even worse than most Americans probably anticipate. And the interesting thing with Evergrande is, let's pull it down here. I think it was $300 billion worth of liabilities, and that's going to have to be liquidated. It's probably not going to be worth $300 billion when they liquidate it to their creditors. I believe that there's a good chance that it's probably going to be pennies on the dollar per asset. So you're looking at an extreme haircut for a lot of these creditors that had money tied up in Asia. And they're saying that they want to have people who invested have those properties continue to be built and that they have what they pretty much paid for. I don't necessarily know if it's going to get to that point. But the interesting thing about that is that it's going to definitely impact how much money comes into China, right? And I think this kind of ties in with what's going on in crypto this morning, right? There's a lot of money that's trapped in China. Again, can't buy U.S. equities via ETFs. You can't short sell. Your money's kind of trapped right now, and the yuan is devaluing with each liquidity injection that the PBOC is doing. So what do you want to do to make sure that you're not losing value to your money? There's two places you're going. You're either going to the Japanese markets or you're going to crypto, just so you can get out your money out of China. And it's pretty much self-custody, right? So what I'm seeing with this is that there's going to be a huge outflow of capital in China fairly soon, if not already. I mean, we've seen a good amount, but there's a lot of people saying that, maybe this is the time to buy the dip, get bullish on China. This is not a good look. And the other thing is they have to reprice all their assets on their balance sheets, right? They're going to have to go in there with these liquidators. They finally picked one. They're going to go in. They're going to see what these assets are worth. And the problem is they're probably going to find out a lot of these assets aren't worth what they initially thought. That's going to cause a fire sale. And it's going to bring down the price of everyone else who has certain assets in China as well. And it's going to impact the banks. Like I said, I mentioned UBS. I mentioned HSBC. Those are two massive banks that have exposure globally. UBS, we already know, has so much trouble with Credit Suisse. I mean, there's a good chance that we could be seeing some pain there fairly soon, maybe even later this year. Same thing with HSBC. That's a bank that's a British Hong Kong bank, but they have tons of exposure to U.S. markets. And again, all these banks are interconnected. They all have exposure to one another. We see the reverse repo markets and all that. It's going to be really interesting to see how fast this kind of spirals, but it does not bode well for any of the banks, I think, and it doesn't even help at all when it comes to the U.S. market banks, because we know the bank term funding program is coming to an end. Reverse repo is probably going to, drain sooner rather than later, and we're going to be sitting here with another banking crisis as people are selling off assets for U.S. dollar, and it's just going to push the dollar up higher. That does not help tech stocks. It doesn't help the indexes. It's not a good look going out. Let's see what Chris has to say. About to find out how much of that CNY just put into the HSI's actual liquid. Exactly. I would not be bullish on the red cabbage right now. I'm just saying that right now. I didn't come up with that term. That was on a Jeff Snyder interview that he had with someone over the weekend. I just thought that was the greatest way to call the Chinese yuan red cabbage. It's a good name. But Yeah, I don't believe that it's 7.18 right now to the one US dollar. I mean, I think there's a good chance that we could see that be absolutely inflated to that point. So it's going to be interesting to see what happens in China. I think this week is going to be important. We do know that they were doing some stuff to, lower rates come February 5th. Does it mean that the markets are going to sell off before then? I don't necessarily know. I think tonight's going to be really important to see because again, they halted all the trading on Evergrande. They dropped 20% last night as soon as the market opened, which also tells me that they kind of knew that this was coming, right? I think a lot of people who had Evergrande shares still were probably like, they're probably going to liquidate it. Let's get out of here right now, and that's why they halted trading for Evergrande and all the subsidiary companies of Evergrande as well. So it's a big deal, but we're not going to see this in the U.S. probably for a while, at least not after till the earnings season too. There's just a lot of stuff that's going on, but it's going to take a little bit of time. I'm not saying it's going to take a year. I'm saying it's probably going to take maybe weeks to maybe a month or so before we start to see any type of ripple in the U.S. Economy market.
Okay. Very well stated there. I know you'll continue to keep us abreast to what is going on over in China. Let's get into some of the charts that have been catching your eye today. I mentioned Bitcoin taking that move up, about a 2.5% move today from the high 41s now to just above 43K a token. Some of the alts that are running with it as well. We are seeing TradFi market getting a little bit of momentum heading into the close, about 45 minutes left in the trading day. And I'm now seeing the NASDAQ up about 0.9%, S&P about 0.6. So seeing equity start to rally here near the close, what has gotten your attention and where do you kind of see things? I know we're going to have waves upon waves and ABCs, 1, 2, 3s. We're getting, we're learning all of our basic numbers and letters here. But kind of give me the breakdown. We'll start with Bitcoin and what you're seeing.
Yeah, definitely. I think right now with what's going on in China, like I said, outflow of capital, pretty good reason why people would want to be in Bitcoin right now. And again, a lot of people who have money tied up in China might not even live in China. They live somewhere in Asia, maybe Singapore or something like that, but they have exposure to that and they want to get out of that market. Obviously, they're going to move into some of these other assets and you could self-custody crypto, right? So I think that's why we're seeing a bit of a pump. It's also, if you're just looking at the wave structure, I think we're in an ABC corrective pattern right here, which would pretty much make sense because wave twos, 5 wave moves are always ABC. So if you line this up, it'd be 5 waves up, which we got here. I think we're going to get 3 waves down and then 5 waves up here. And that would complete this ABC pattern. Maybe this takes us to 45, right? This is our 44 and a half, 45, somewhere around there. I think that's kind of the base case that we were looking at. And this is just on the hourly chart. If we look at the daily, we're anticipating something very similar where we get, we got our massive wave 1 down, or wave 2 goes to maybe 44, 45. And then and again, this is obviously skewed because this is the daily, not the hourly anymore. But then we would have another 5 waves down for our wave 3, which I think is going to be extremely deep. I think our wave 3, they tend to be the biggest wave unless we get some type of weird extension. I think that if wave 1 was massive, I think wave 3 will be even bigger. Kind of lines up to what we're looking on the daily, 185 on the stochastic RSI. So keep an eye on that. So in the short term, I think we should have a bit of a correction, maybe in the next day or so. But if it decides to go up a little bit higher, there is a scenario where we could get to the point where it's like, okay, we go to 44 and a half or so. We come back down to maybe something like this, 36, 38.6. And then we have another corrective wave where it's just a flat correction, meaning it just trades sideways in this pattern. It's going to be interesting to see which one of those two scenarios comes up. But I do think that we are going to see a correction before we get another push up to finish off this wave C and this wave 2. Eventually, this is going to be pretty much marking our top, I think, before we get a new low in the new year. So it'd be interesting to see how that plays out. If we look at let's see what else we got on the alt market. See Ethereum. Yeah, Ethereum had a pretty good day. So again, these all look like wave 2s to me. I think we put in a really good wave 1. Wave 2, it's probably got some more room to go up. Not getting too excited. I think alts in general still have a good shot at pushing up higher and putting in a new high for the year. Question is this just another lower high, or is this, the start of a rebound? To me right now on the daily for AVAX, this looks like it's pretty overbought. It's got to 94 and 76. If we look at, say, something like Link, Come on, internet. There we go. Link is just putting in a sideways consolidation pattern, so there's still room for it to go up if it wants to. Let's see what else we got. Matic looks like it might be doing it. Yeah, Matic, is this going to put in a new high? I don't necessarily know. Looks like it's getting pretty overbought on the stochastic RSI. Volumes are dropping pretty significantly. We also know that Grayscale and FTX aren't pretty much unloading onto the exchanges nearly as much, and they're also don't have as many short positions open. That's something that was really impacting the price. Again, people were trying to put in margin longs down at Bitcoin around 36K, 38K. Same with a lot of these other support levels for alts. They're going to take that out as liquidity each time. If you're buying spot, the price would have pushed up higher, but everyone was getting greedy. They wanted to do 5x, 10x leverage. It's easy to liquidate you guys and then just buy back lower. So that's kind of what happened. But for the alt market, I'm not too concerned. I am concerned about the only thing being, even if you look at Solana, I am worried to see if we are out of this pattern to the upside and we're starting to put our one to the downside. I think where we are currently, this price, if it goes above, the December high, which is around 126, and then again, whatever high was prior for a lot of these other altcoins, that means that would probably be the blow off top, and we wouldn't see those highs for some time. That would structurally, that's what I think what we would be seeing, right? No guarantee of any of that just yet. I know that Tether printed, I think, $1 billion this morning too. So Tether's also is a Chinese company too, IFNX, that owns them. So there's a lot of stuff that's going on across the board that's tied to the Asian markets. But I think right now we're just seeing a bit of a pump, people trying to get out, liquidate some people, and then just kind of self-custody at this point before they decide to do their next move with the markets, which that's pretty much all I have on crypto. But that kind of leads into what's going on in the equity markets too right now, right? You're seeing that pump in the indexes. Maybe it's some people who had money in China that weren't in China. They're also just throwing some money in the United States markets right now too, right? Seems like a pretty smart move, again, for what's going on. I got the S&P up here, and I've added all the gaps that the S&P has formed since October up here, and there's probably more on the smaller time frames, but this is the daily open to close. You can see that there's a lot, right? And we've built a lot even recently. Let's go down here. You can see that there's a lot of gaps in between the market open, market close, where the price is actually sat and rested. And it seems like there is volume decreasing here. Not significantly, but there is volume decreasing. And I want to pull up the stochastic RSI for the S&P because this is really interesting as well. It's 100 and 100, and it's been like this for a few days now. So it's extremely overbought. It's the most overbought it's been. And, the most overbought it could be, but price could obviously still go up for a period of time. Again, we're on the daily. If we look at the weekly, or take a look at the 3-day. On the 3-day, yeah, we're at 95 and 81, so we're extremely bought on that time frame. Let's go to the weekly. 95, 98 and 94. So I mean, we're extremely overbought across the board when it comes to the index, right? How could we not be? We're in all-time highs right now, and if it's not overbought here, it never will be then. But I think what we're seeing here is kind of like this mania top, and I think that there's a good chance that these earnings definitely change the trajectory of some of these, especially if we get one or two bad earnings from the tech companies. And I'm just going through the major indexes right now. They're all very similar. And then again, if we look at the Russell, not the same story, right? So it shows you how important these tech stocks really are. I had someone the other day on Twitter trying to say that the Russell 3000, let me see if I find that. The Russell 3000 was, let's see, this here. No, that's not it. That ain't it. All right, forget about that. But the Russell 3000 put in a new high, and then I looked up on Google. I'm like, what are the top 10 stocks in the Russell 3000? Microsoft, Tesla, Meta, Facebook's the same shit. What else is there? Nvidia, Intel, all these big companies, and it's like, well, yeah, no shit. No wonder why it's going up forever. If you look at the other 2,990 companies in there, they're probably all just still at the same place they were 3-4 years ago, if not lower. So it's really hard to decipher any of this given what's going on in the tech stocks. But I do think that there's a lot of outflow capital, people that are afraid of stuff that's going on in China, coming into the equity markets in the United States. Again, you're buying the rumor, selling the news, whatever the data that comes out on Thursday. I think it's going to be important. AMD is also going to be important too. I think that's tomorrow or Wednesday. I can't remember. But if we look at what's going on here, this is the dollar. We're seeing that the dollar is doing really well in the Asian markets, like after hours, and then as soon as the equity markets open, we're absolutely finding a lot of resistance. Right, we went all the way up to 103.824 today. Obviously, that's because of what's going on in China with yuan. But now we're currently sitting at 103.414 as the equity markets kind of rip. The other thing is the volatility trade. The VIX went up to 15.35 today. Why did that happen? Why is the VIX and why is the dollar going up against these equity, these top indexes in the equity market? It's probably because people are afraid and there's people that are trying to unwind that trade, right? 15 is a big move. I mean, let's put it this way. We're still up 3.32% on the day for the VIX, but if we pull this from where we opened, I mean, from where the bottom was to where we are, it's like an 12% move for the VIX. That's a huge move. I think that there's a good chance that people are kind of betting on the VIX in the next 3 to 6 months. I wouldn't be surprised if that trade unwinds even sooner. So, I mean, you saw how fast it moved 12% in one morning off of news that the U.S. market, it didn't even make headlines in the U.S. markets. So I'm very concerned to see how this plays out going into February, into March, even after March, maybe like April or so, when we get about a month or so into the Bank Term Funding Program being over. It's going to get pretty dicey. I think that's probably the outlook that I have. If we look at Apple, I'm just going through some of these stocks real quick. It's at the same place. It's a triple top right here, right? It's once, twice, thrice. You look at Tesla, it's bouncing here, but it's still down significantly. I mean, it's up 4%, but it went all the way down to like 180. Nvidia, obviously, I'm not going to fight with Nvidia. That's one that's good night, good luck. You can't short that thing right now. I think that at some point the narrative
in the world. Look at that. Look, it's so beautiful. I mean, look at
I have no
this.
problem with Nvidia right now because again, I'm not going to fight something like this.
Oh,
It
Kevin,
seems
Jensen doesn't care if you have a problem with him or not because he's going to continue to just pump the price of my beloved Nvidia.
You don't even want to know my price target. If I'm right about, and here's the thing, I don't like to brag because I don't necessarily know what the fuck's going to happen in the markets, right? I was bearish against Binance for the longest period of time.
Don't you? You're about to say something that's going to upset me to my core, and I'm not really emotionally in a place on this Monday to handle that.
Your account looks pretty enough right now. You can handle the one little jab from a small guy like me behind the screen. This is what I'm going to say. I was bearish against Binance. 6 months later, Binance got in trouble with the DOJ, right? I'm not saying that I know all this stuff, but I'm saying there's writing on the wall. Some people like to ignore it. I choose not to.
Yeah, but
Evergrande.
Nvidia is now in bed with the U.S. government. So, like, what are we talking about here?
Evergrande, right? That's the other thing that was really important. Here we are. The last thing I will say, don't let Jweb never. And again, I'll just short Jweb if I don't like what he has to say, but I won't do that because I like Jweb too much. The thing I'm saying with Nvidia is I think the AI narrative is long drawn and pretty much just don't think that it's going to be something that's going to matter in these earnings calls. Look at PayPal. PayPal already brought up AI, didn't do much. The question is, I know Nvidia does offer a lot of value, and there's the reason why people are buying, a lot of these Nvidia chips and stuff like that. China is in a really bad place. They were a huge buyer. I know the U.S. is kind of blocking them for a period of time. Yeah, I agree with Chris here. The thing is, I think that the demand for a lot of these is going to drop significantly, and it's going to be. I'm not saying a beanie baby, but I'm saying that the demand is so significant because it was a hot topic for all of 2023. I think we're going to start seeing a lot of semiconductors and a lot of these AI chips start to pull back pretty significantly. Now, the question I have is where does Nvidia stop? I don't necessarily think it's going to be a straight missile straight down, but I do think that this is no different than the tech bubble that we got into in 2001, 2000 or 2000, 2001, 1999 too. Yeah, obviously those 3 years that spanned it. I think that you're not going to like this. I think somewhere in the 150.
Oh, Kevin's accidentally on mute. I guess we're going to wrap it up for today's
150.
show. You son of a bitch.
150 is a level that I'm looking at. I'm not saying it's going to happen right away, but I do think that if there is a tech bubble, if there is a tech bubble, let's put it that way. Nvidia is not the leading cause of it, but I think they offer the most value out of all the other ones. Maybe Amazon does well too, but the other ones are an absolute bubble. I think the AI narrative is absolutely going to fall on its face. Mark Zuckerberg kind of being a top there for me. The dude came in at the top for Meta back in 2021. He's coming out here saying that he's going to build an AI field in Indiana. I don't buy that one bit. I think that seems like he's doing too much too late, and I think that's going to impact how people perceive it, especially the need for if we start to continue to see layoffs and a lot of these other things impact the market. And again, I think we're at a really critical place right here in the market too. We've seen over 75,000 layoffs from a lot of these companies in the month of January alone. Expected was about 40,000, so we're well above that. I think a lot of these earnings are going to be crappy. Even if they do beat earnings, they're losing profit. The dollar is too strong right now, and a lot of these other world economies are just seeing so much headwinds. I mean, China's export market is so important, and again, with the Red Sea, if that continues to be expensive, that's just going to drive price down. Like I think the Red Sea is going to absolutely in the next month or two just drive prices up because these companies can't afford to take on these losses. They're going to put it right onto the consumer. The question is the consumer going to be able to afford this? I don't know. If layoffs continue, I don't know. So that's kind of my base case for what's going on, how tech is kind of this bubble, how things are going to definitely be impacted by earnings and China, but I'm just not convinced right now, and I never was, and I never will be until this market's at the bottom, that we are in a bull market that's going to be long lived.
All right. Well, you've upset me very much.
I'm sorry.
We're gonna end with a new segment that I'm springing on Kevin last second. Could just came to my mind last second. Dumb tweet of the day, and this one was pointed out to me by Kevin, shared by the Unusual Whales account per the Wall Street Journal. It won't be a recession. It will just feel like one. What the fuck does that even mean? That might be like, huh?
Gaslight.
Like, is that? I'm sorry. I'm trying to figure out if I'm the one who just had another stroke or if the person who wrote that is, because that makes
Oh,
not a damn bit of sense.
I forgot to mention too, because this kind of reminded me about recession and everything like that. The ECB, out of nowhere, starting to say that, yeah, we're our next one is probably going to be a rate cut. So they're looking at maybe April or June for a rate cut when they said we're not even talking about rate cuts. Something's fucked up. Something's broke. Euro started pulling down, dollars going up. This market's so ready to fucking give through. But I mean, the thing is, no one's priced in anything. But clearly, it's not going to be a recession. It's just going to feel like one. So that's how I will end it. I got nothing left to say. Good luck, everyone.
If you want to contribute to our dumb tweet of the day segment, just send them over to myself or Kevin. We got our Twitter handles right there, our X handles, whatever the fuck you want to call them. Just send us whatever ridiculous tweet of the day, and we will make fun of it. And that's how we're going to start ending our shows for a little bit of levity. So appreciate everybody for being here with us. If you have not yet, like today's show, subscribe to our channel, drop a comment. Any of that is appreciated. Have a great day. Stay safe in the markets, everybody, and we will see you tomorrow.
Take care, everyone.